Hello, everyone. Today, joined with me, I have Azaan Barlas and I have Weston Weinberg. And myself, Jason Cruz, we are Top Down with TCM. Today, we are joined by Andrew Ochoa. If you could just wave real quick. And I have John Redoutey as well. Wave real quick. Let's start with John. Can you tell us a little bit more about yourself?
Yeah, thanks, guys, for the introduction. Really appreciate it. I transferred to Fullerton my junior year. Used to be a Division I swimmer at Seton Hall University. Have pursued my career in finance. I am also currently working as a swim coach at Mater Dei High School. I bar back and do security at Malarkey's, and I am in TCM.
Nice. And Andrew, could you tell us a little bit more about yourself, what you do at TCM?
Yeah, of course. Yeah, so I also am a transfer from Fullerton College. I actually went to Rio Hondo for a semester before Fullerton. Kind of stopped going to school, went back to school, and then transferred over here. And right now I'm bartending at Red Lobster, and I'm the assistant manager for a Belgium gastropub named the Rusty Monk. And I'm also a portfolio manager for the derivatives and President Scholars portfolio for TCM.
Perfect. Azaan, I feel like your question could start it off real quick.
Yeah. So I know you guys are both in the software sector. And also last semester, you guys both weren't portfolio managers, but coming into this semester, you guys came into your own portfolio. So whichever way you guys want to answer it, one by one, Andrew could probably start first. How do you feel now being a portfolio manager? How has the work changed for yourself, and how do you like it, basically?
Well, the work, there's definitely a lot more, that's for sure. I think it's a really big transition and responsibility that you have now as a portfolio manager compared to being an analyst it's just way bigger, I guess, just because, when you're just an analyst, you don't really know what everyone else is thinking. Sometimes I would have to ask the portfolio manager, what's happening? What are you guys interested in? What do you guys want to sell? What sectors are you looking at? What do you want to add to? So being a portfolio manager now, what I like is you kind of know what's going on, and you could kind of use that and look into those sectors and so forth. So John, do you want to?
Yeah, absolutely. I'll take it off. Sorry about that, guys. I definitely have to agree with what Andrew said. I'm seeing a lot of my involvement currently right now as part of the CFA IRC competition, as a lot, I believe, other portfolio managers are involved in as well. But still kind of maintaining that new level, tackling these. We just actually completed our first year-to-date report for the President Scholar, and kind of already scanning the market for new opportunities, which seems to be pretty difficult with where we're at right now. But yeah, just trying to balance between work, school, and that increased responsibility for TCM is definitely challenging.
So I know it definitely is. And I mean, I know as an analyst, you're mainly working on that sort of bottom up attribution strategy of building a valuation model for a company, looking at multiples and, seeing if it's at a discount or a potential premium for a buy or a sell, and send up the report to the portfolio managers and the board. Since you guys have taken over as portfolio managers, have you seen more of an increase in what's going on in the U.S. economy, and more macro level and top down level thinking?
I could start that off. So actually, for me personally, when I was an investment analyst, I like to do top down more so than bottom up, just because you just kind of got the bigger picture. And I think that the economic backdrop is really important to understand before you actually invest in a certain industry or sector. And then also, one of the big things that I look at before, looking into a company is the industry and how much compound annual growth revenue that'll see in the next 5 years. For instance, I wrote a report on NXPI Semiconductors, which was the chip, like they produce chips for like EV vehicles and not like hybrid vehicles, and that industry was supposed to grow by 38% over like the next like 5 years. So
yeah, and I mean, it's kind of building off that, and I completely agree with Andrew. I think it's crucial, kind of doing that, that taking that approach in the sense that it, you know, if the market's overinflated, it's a completely different sector you're going into. You know, if we're kind of in an early stage right now, we're a little bit behind China economy wise. And kind of just looking at what sectors are going to produce the best results, the greatest alpha, in a sense. I speaking of reports, I guess let's see. I did a report on big lots, and it was kind of a catch-22. You know, I was kind of believing that we were going to see a market drop in the economy, and that people were going to be losing a lot of money, so they were going to resort to this kind of more conservative spending, which was going to really boost sales. And I was trying to get that passed before the holiday season, when kind of everyone was without the stimulus check and not having the money for really Christmas items. And what was really fascinating that actually Professor Ko was able to catch was that Big Lots actually always goes up and surpasses all of its competitors during kind of a flip side, an upside down economy, when people are not really knowing what's going on. And to his point, he actually ended up being right. Big Lots shot up, and then right after holiday season went right back down to where its original value was.
Okay, great. So I wanted to jump in with a less technical question and just a little bit more of what your thoughts are on the general market overall, and your market outlook within the next year or so. Not so much the economic side of it. We know the economic data. I just want to know your guys' thoughts on how high the valuations are. Are there opportunities? Where do you see our valuations going? I don't know, within the next year.
I could probably start this one, Andrew, if you're all right with that. I think it's definitely a very hot topic right now, Jason. If I don't know if you saw, but Warren Buffett kind of released his risk tolerance model, and he's saying everything's pretty much extremely overvalued. I personally think that with the new stimulus they're going to pass, that 1.9 trillion, that there's definitely still some market share to capture. There's still some upside still available. What my dilemma with it is once all that money's kind of pumped into the market, we're going to continued record highs on everything, and the government's going to have to, I believe, kind of be left in a situation where they have to pump in 1.9 trillion again to maintain those same market levels. And when that does not happen, we're going to see the market kind of starting to fall off. And I think that's when everything is kind of going to take a dive, and we're going to see those overvalued companies really come back down to their real value.
Very fair. Andrew, what are your thoughts?
Yeah, I think me and John, we've had this discussion before, and actually, I think, we kind of have different perspectives on it. I think I'm a bit more optimistic. And the reason being is, okay, so on average, GDP grows 3% per year. This year, it's expected to grow 6%. That's double the amount that, previous years have seen. So just with that, and all the stimulus that's coming in. And then also another thing, people have just been really cooped up in their house, and they have all this money that the government has given out. So, once everything reopens, they're going to want to spend that money. And I think the S&P's earnings, like in total, was 100 last year, and it's actually supposed to double to being close to 200. So I just with all that information, at least for the next year, and with interest rates staying low, I'm like really optimistic.
So do you believe that the market's being inflated more due to fiscal stimulus, or is it more due to the lowered interest rates from the quantitative easing and monetary policy that the Fed has been pushing recently? Because I know that a lot of the time the the lower interest rates on bonds, it allows you to pick up debt cheaper, which makes your balance sheet look a little bit better. Do you think that could have an effect on the economy? Why you have a positive market outlook, Andrew?
I think it's like a mix of both. Like there's a lot of liquidity, and then obviously the low interest rates. Where people like companies could take out loans and use that money for whatever they need for their business. So yeah, that's a reason. And also one more thing to add is, this is like just my opinion. I think that so growth has been outperforming value for a while now. I think it's been like about a decade. And to be honest, like value, I think that it worked, but like it might have only worked back then, and like now it's a different time. The world is changing at a much faster rate than it was, back when value was working. So how you said like valuations might be overvalued. Maybe they're just the new norm. Maybe our world is just changing and really fast, and people are smarter now because they have access to news like just instantly now and faster. So that's just something that I think about. And
that's super interesting to know that like you guys are both in software, like in the same industry, but you guys differ greatly on like how you think the market's going to turn out. So I have a question going with basically what you guys forecast the market's going to do. So for John, I would ask, what do you think are the biggest subsectors of software that you should be the most afraid of? As in like which sectors are going to tank the most, or like just like are the most overvalued? And Andrew, I would ask, which subsectors do you think there's still a lot of potential in software?
That's actually a really good question, Azaan. That's kind of a tough one to think about in reality. I would argue kind of social media companies right now, just purely on the basis of a lot of the lawsuits surrounding Section 230 that's been going on. And also, if we, this is just kind of a personal view of mine, and kind of to Andrew's point that people have been cooped up for so long that I think if we do reach that point where we, everything opens up and we have this herd immunity, as people are talking about, that no one's going to really be at home. People aren't going to be sitting on their devices for 8 hours a day. They're going to be wanting to get out. They're going to want to go on vacations. They're going to want to, go to the beach or just be outdoors. They're not going to want to be glued to their phones. And I really think a problem is a lot of these numbers that the social media companies have produced is a direct result of COVID-19. And if investors see this huge drop off from everything opening up, I think that could play a pretty significant role.
And, I'm sorry, was the question pertaining to our sector, like specifically, or just the markets in general?
I would say the sector, but if it's you can talk about the market in general, like what if there's something really pertinent that you want to talk about.
Okay. Undervalued, or sectors that I'm interested in personally, I think that like mining and battery technology. Battery technology, I think, is actually one of my favorites, just because it's the technology now for that is getting better and better. It's cutting costs and it's increasing performance. So, seeing that, I think that's our future. And obviously we see it in like car companies like GM, they've already kind of made that transition to electric vehicles. I think Ford mentioned something that they were going to do that. And then obviously Tesla, like the biggest player of all. But like it's not just going to be cars. That's just the beginning. Eventually it's going to be boats. I think actually today I saw something that an airline company actually said that they were pre-ordering electric airplanes. And then, boats, just like everything is going to be electric. And then also, we're not going to be going to gas stations. Eventually we're going to be going to charging stations. So, that's something I really would like to actually add to the portfolio. And then also, I think that cryptocurrencies, certain cryptocurrencies are the future. So definitely I want to look into like mining. But the thing is right now, I've looked at like a lot of different companies and it seems like they're really inflated. And then just like car companies, like electric vehicles, they're companies, they're making a lot right now. And back then when the car was the first like engine was invented, there was like multiple, I read something that said there was multiple, like 500 different companies, but only a couple, came out of the storm, I guess, and like, survived. So that's kind of how I feel. Not about the electric vehicle. Well, I do feel about that electric vehicle, but more so about the like mining, just because there's a lot of new companies right now and, they're not generating any revenue. So you don't know exactly which one to choose. So that's like kind of where I'm at right now. And like what subsectors I guess I'm interested in.
So I am glad you brought up cryptocurrency and you brought up Tesla because that was one of my questions today. One of the biggest things that happened this week was Tesla buying Bitcoin, $1.5 billion worth of it. And then there's this discussion around how cryptocurrency is now finally getting into the mainstream and there's going to be a payment network that huge companies are backing that are accepting Bitcoin. So what are your thoughts on the future of Bitcoin and Tesla's move on this? Is this a good move?
I personally think it's a great move. The thing is that it does, I guess, like for more risk averse investors that are invested in Tesla, they might be a little bit concerned about that just because Bitcoin hasn't really stabilized. But, I think the gold, so it's comparable to gold. And the reason, I don't want to go into like the details, but honestly, it just makes total sense why Bitcoin and gold are correlated. But actually Bitcoin is a better version of gold. And like I said, I don't want to go into in the details, but
how is Bitcoin a better version of gold?
Because you like gold, you have to like carry in your pocket. Like back then, that's why they switched to paper currency. Like you don't want to carry a bunch of like gold coins in your pocket. So like it's just digital, and you could carry it on a flash drive or on your phone or whatever.
I'm definitely in agreement. I can't speak too much about it just because I haven't fully done the research to Andrew's point. I'm definitely a proponent of it. I think it was a really big move. I'm drawing a blank on the creator, but some third-party app developer created an app that now allows you to basically convert Bitcoin to wherever currency you're in, whatever country you're in. Yeah, it was a really awesome thing. I think that's kind of what sparked the growth and in the platform. I am curious, though, because I've read that India is actually planning on banning Bitcoin and that they're actually going to create their own cryptocurrency for the country. So it would be kind of fascinating to see how that plays out and how other countries play out, because I'm sure they're going to want to kind of leverage, we use our own cryptocurrency and we're not going to accept other cryptocurrencies. And I think that will be really interesting, but I'm still a firm believer that Bitcoin will most likely hit six figures.
Six figures. All right.
I mean, that's a very high valuation, but I mean, like, I'm not like a Bitcoin or, Bitcoin bear or anything like that. But what I found interesting about what you were saying, Andrew, was about how it's very volatile right now. And, you're looking for it to potentially reach more of a stabilization. And then that's when it will, truly, it sounds like you're saying that that's what you want it to stabilize, but could you see right now the current volatility that's going on with it as a good thing?
Obviously not, because it's considered as a commodity. So commodities aren't supposed to be volatile. So, but I think that once it hits that market cap, and, some people even say that it's not a hedge to the market, which honestly I disagree. And I think that if we do have a correction, we'll see Bitcoin actually go, like, I think that it will skyrocket, and that'll kind of, I guess, that'll kind of back the idea that it is a hedge against the markets. But yeah, I just think that eventually it needs to get to a market cap to where it just stabilizes. And yeah, I guess like only time will tell if that'll happen. But also, you have these big institutions backing it, such as PayPal. And then also, like John mentioned, India actually, I think, did ban Bitcoin. We're eventually going to move on from like paper currency to digital currency. I think China is testing out their currency right now. I think UK will be coming out with that soon. And that's why Bitcoin is gold, because there's only going to be 21 million in the world. And the last Bitcoin will be mined in, I believe, 2040. So, why is gold so valuable? It's because it's rare. And so, the fact that there's only going to be 21 million Bitcoins in the world, it's going to be considered kind of rare too. So, that's why. Oh, go ahead.
Okay. My thing is with that. So I understand that there's a finite amount because for some reason blockchain and you can't mine after a certain point. And if you try to, you'll basically take years to make another Bitcoin. But that's the whole discussion within itself. What I'm trying to get at is if there's a finite amount, right? Eventually everyone will own the max amount. Prices will obviously stabilize. So Bitcoin cannot be an investment. Do you guys disagree or agree?
I just wanted to, throw in a point. I'm sure you've heard about the famous Dogecoin.
Yeah.
It's kind of floating around the market right now. And this kind of goes back to my just brief point I wanted to make on the market. But you've seen a real rise in the retail investor, as it's called, the people that aren't that involved in finance, but they're seeking the returns of investing. And I think what's going to happen is you're going to see all these people that have hopped on this hype train, as I like to call it, for the Dogecoin, and they're going to realize, oh, well, there's an infinite amount, so it's really kind of impossible to actually stabilize a value on Dogecoin. But then they're going to turn and see, okay, well, there's a limited supply of Bitcoin, so let's all go put our money there because there is a possibility that could stabilize. So I think that will continuously push up the price. In regards to a finally stabilizing, I think what will also be interesting is I had read articles that these kind of large owners of Bitcoin, which I would say Musk now is, for example, in Tesla with their $1.5 billion investment, they could sell all that at heart's will and they could tank Bitcoin immediately. So I think that it could stabilize in a finite form would almost be kind of false, but I'm kind of still unsure on that matter.
I think a big factor is going to be whether institutions jump on board with Tesla, moving forward. I think if more institutions use their cash and invest in Bitcoin, definitely it could even probably reach 100,000 by the end of the year. It just depends, how that plays out.
See, but that's the thing, though. It's a currency, not a company that can keep growing. So once everyone's on full scale adoption, it'll turn into a dollar where it's relatively stable to the point where I can use it to buy a Tesla and it won't drop in price, like, let's say 6 months later, like the value of my currency. So that's where I personally have the issue with cryptocurrency. But
I think it's also still like in its infancy. So, it's just like gold, like pretend like, you didn't really know about gold probably, but then, you started seeing that it was rare and people were wearing it or whatever. Like, Bitcoin is becoming more popularized and then you see people actually using it in like an app. Like, honestly, if PayPal kind of integrated that with Venmo and you could just kind of like in a seamless, like, like just like transaction, you could Venmo me like 0.1 Bitcoin or something, I think that would be awesome. But, it's still like in its beginning life. So, I think right now that's what they're banking on, that's what they're thinking. It's still in its beginning life and it'll appreciate. And once it does hit that maturity, I don't think that companies aren't investing in gold. Like, they're not putting their cash in gold. They'll probably just keep whatever digital currency that the government has or whatever, moving forward. But I don't know if that kind of like clarified what I think about it, but yeah.
I appreciate your perspective on it. It's interesting.
What would be the purpose for, let's say, a retail investor to add something like Bitcoin to their portfolio? What does it do for them? What does it do for you?
I think, Weston, you're saying to their portfolio, there's a reason called a retail investor, and not to flame them or anything, but in what sense do they really have a full portfolio? I feel like anyone that's listening to a Reddit page and investing in a company like GameStop, I mean, we saw this excellent short squeeze was a great example. I spoke to many people that all invested, and they're like, nope, we're going to see it keep rising. Wouldn't pull out. And so how can you really, you have to be careful in placing credit to these people in portfolio and understanding a proper analysis on how to grow. They kind of go with the trend. It's a form of bandwagoning, in my opinion.
Then on an institutional level, like, why should a portfolio manager add a stake of Bitcoin to their portfolio? Like, what's the advantage of that?
I mean, I guess it's just like a company. Why do you invest in a company? Because you think that it'll grow. You think that it might eventually just catch on and might be the new gold. And, I think I just saw the statistic that 1%, like the 1% at least has 1% of their portfolio into Bitcoin. So, it seems like it's catching on.
Mm-hmm. Yeah, you guys brought some really interesting perspectives on Bitcoin as well as these sectors, but I think we are running out of time, so I don't want to keep you guys for too long. But thank you so much for joining us on this episode of Top Down with TCM, and we'll see you in the next episode.
Sounds good. Thank you so much, you guys. Really appreciate it.